Hey everyone, and welcome back. For those that are new here, I bet you never seen this type of intro on a financial channel, huh? Exactly. This is one of a kind. So, Amit is busy with Robinhood stuff. Tanner probably the same. Jose is probably figuring out a new semiconductor company, and is too busy to come on a Broadcom earnings report. So here we are. We are going to cover Broadcom's earnings report, listen to the earnings call as well. The market will close in 12 minutes. The markets will close in 12 minutes. It's actually been quite a good day. It's been quite a good day across the board for AI, tech names, software names, you name it. Quite a big week so far, actually. I mean, if you looked at the futures on Sunday, you would think that we would lose our underwear on Monday, but no, things were actually much better than expected. And so let's have a look at the market right now. Good evening, chat. Good afternoon. Hope you're all having a wonderful day so far. And of course, welcome to all the Amit refugees. This is White Amit speaking. I'm glad you could join us on this wonderful, what is this? Wednesday. I don't know. Yesterday, I thought we were Wednesday. There's a nice full moon tonight. So what do we have? I'm very surprised to see ASTS actually still at $105, despite everything that's been happening over the past couple of weeks. $105, up 14%. Iron is up 13. Nebius is up 13. I mean, it's quite an incredible day. Yes, you did see the red names here. We're going to go over them in a bit. Oscar is up 10%. We're now at $15 per share. Applied Digital is up nicely. BMNR. Hood is up 8.6. They have their event later today. I still have no clue what the airport team is about. Plenty of new products will probably be announced. Hopefully it's not again the cash delivery type of thing, but we'll see. CoreWeave is up 7.8. Then we have Shop. I mean, everything's up here, so we like it. What don't we like to see is, again, Duolingo, making sure that bag holders know how to say bag holders in multiple languages, myself included. It's down another 5% today. Shift4 is down 5%, which is very strange because it was greener before. Jared Isaacman, previous CEO, founder of the company, bought $13 million worth of shares. And I believe today I've seen a post of someone say that he bought another $3 million worth of shares. I guess that's not enough. Okay. Alibaba is down 1.7. I think they're reporting tomorrow or Friday, or maybe next week. I don't know. Pretty soon. Salesforce is down 1. Google is down 0.3. And then all the rest is green. SoFi barely green, but still green. So we like that. Am I in ASTS? No, I'm in Rocket Lab. I'm not in ASTS. I do wonder where Rocket Lab is at $72. Okay. Makes sense. I know AST has reported their quarterly figures, what was it, Monday after the close? I have not looked at it just yet, but I assume it was a good one because otherwise, why would the stock be up so much despite it already being, a $33 billion company while not having that much revenue right now? Broadcom is the one reporting after hours. Tomorrow we do have Marvell, so I assume whatever Broadcom will say today will impact Marvell, the stock. Bag holding, medical back appeal, Blavazita, yes. exactly that. That's Flemish or Dutch, whatever you want to call it. So Broadcom, it did fill that gap that happened here in September. We're basically at the same price we've been in August of 2025. And if you joined Jose and myself before, you know that NVIDIA is basically at the same price. It's been flat for 7 months, NVIDIA. Not bad. Not bad of an accumulation period, plus valuation can catch up, although it's not really one that's super, super expensive. But Broadcom is a very interesting one because we all know that they have the momentum, the business. So if we go and have a look at the stock, over the past 5 years, it's up 619%. Over the past 3 years, it's up 404%. Over the past year, it's up 70%. And then year to date, down 8.2%. But okay, fine. It's a close to $1.5 trillion company. Trailing PE, this is one of the most expensive ones. When you look at the big companies, the semiconductors. So 65 times trailing earnings, 30 times forward. But the business does have quite a lot of momentum. Let's have a look at what the market is expecting the company to report. Nebius, if Nebius goes red, it's your fault. If Nebius goes red, it's your fault. Although I highly doubt we're going to go red today, but if it's red tomorrow, then I'm sending all of the hateful comments towards towards your post with screenshots on X. If we look at what the market is expecting, they're looking for $19.1 billion in revenue for Broadcom. EPS just over $2. Free cash flow, I wonder if it's a bigger gap than expected. Just over $10 billion. Am I going to ring the bell when the market closes? No, I don't have any bells to ring. I do have a gong. So, but I think it's a bit better, if I do say so myself. Is it worth putting in a bet? I do have a poll running. Are we going up? Are we going down? Let us know in the poll. Yes, there is, for those following the Premier League, there it is. 3-1 Chelsea against Aston Villa. There is Manchester United, Newcastle. There is a Man City game going on right now. So lots of interesting stuff that have nothing to do with the stock market. But yes, I do have a third screen to make sure that I don't miss any goals. But is it worth playing the earnings casino gamble here? Probably not. Because we know what's been happening over the past couple of weeks with earnings. Good earnings and your stock gets punished. Prime example, of course, is NVIDIA. Amazing report, amazing guidance, didn't matter. Stock went down 5% the next day and 4% the day after that. So yeah, I don't think it's worth it. If it works out, great, but do you really want to stress out like crazy for the next 2.5 hours? Probably not. Did I see Poirier versus Holloway? I didn't know this was a matchup. Maybe I've missed something. City scored. I do have Semenyo as captain of my FPL, and I do know that he scored, so I'm already happy with that. But yeah, let's focus on stocks for now. Market will close in 5 minutes. So far, so good. Even year to date now, I guess with the, where is it? Here. No, maybe not. I spoke too soon. We have 666 viewers. That's a scary number. Year to date, for those that think that this is the today's performance, no, this is the year to date performance. One of the craziest one is probably Microsoft. Microsoft being down 16.2% year to date is quite something. Oracle being down 22%, I can maybe understand and justify. Netflix is now up 5%. Very happy with that. The software names being red, again, we don't have to agree, but I guess we can understand why. But Microsoft down 16 is quite crazy. is quite crazy. Nvidia down 3.5, okay. Apple 3.5, AMD 7, Tesla 11, okay. But yeah, this is crazy. Yeah, then you have, of course, all of the defensive names. You have a Caterpillar that's up 27%. That's insane. Costco up 16, Walmart up 15. Well, Costco almost 17, Walmart almost 15. Home Depot is up 7.3%. So it's been quite clear that defensive names, it was a clear rotation towards these names. The problem that people have with this is, of course, the fact that, okay, you want to rotate, fine. But why do you rotate to names with like 50 times earnings? Because it's not that it's not risky. I mean, it's 50 times earnings. Every time we've had a big tech company trade at 35 times earnings, the market was freaking out, even though these companies have much higher margins than a Costco or a Walmart. Now, we know why the market is comfortable in paying the premium for a Costco and a Walmart right now. Is because of the uncertainty. It's because of, okay, what's the return on investment on all of this CapEx spending, blah, 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 blah. The market knows that people are going to go to Walmart and Costco every single day. They know that people like the combo, the $1.5 combo that I saw with my own eyes last week. It exists, it's true. Costco is crazy. I entered, first thing I saw is a couch. I didn't know they sell couches as Costco, but there we were, getting a couch for not even that much money. It was a pretty comfortable one as well. They didn't give me a discount despite me being the couch investor, but okay. But 50 times earnings is still, it's still too much. So maybe, who knows, maybe in 2 months from now, we're going to have a rotation back from these types of plays to from value to growth names. And suddenly you're going to see pullbacks, huge pullbacks in, a Caterpillar, a Costco, a Walmart, things like that. Although you could say that Caterpillar is a beneficiary of all of this build out for AI, which I agree. But as I've shown you in a previous video, I'll show you this again actually. You would think that they see, this was the year to date, by the way. You would think that Caterpillar would experience some growth already. But if you look at the revenue for now, look at this. If we go and have a look, poof, it's not that much. Right here, let's put the year over year comparison, market close in a bit. Look, it's not that crazy. So why would I pay that much for this business? I don't know. All right. Let's close this thing. Where is my gong? Ah, here it is. Almost there. We're almost there. It's a pretty good day. Pretty good day. We're all happier when things are green, right? It's fine. It's fun to have some sales here and there to buy the dip, blah, blah, blah. But we much rather have. Voila. Markets are closed, ladies and gentlemen. We are now past Wednesday. We will have Broadcom's earnings report. I have no idea when it comes out. Maybe in 5 minutes, maybe in 15. But I do know that the earnings call starts only in 1 hour. So I guess we'll have to make up stories for the next 60 minutes. We'll have 20 minutes to look at the earnings report and things like that. So for now, pretty good day, pretty good couple of days. We do have Amit in the chat. He's getting ready to, I don't know if you're going to present at Robinhood or not. You're going to play the steward. I don't know why the team is airport, but good luck. Have fun. I do hope that my Robinhood stock continues to go up. Today's up 8%. Thank you very much. I would love to get invited by Robinhood once, like as a European Robinhood supporter. Vlad, if you're listening, if you want to have a launch partner in Europe, let me know. I already have the app on my phone with a What do I have SpaceX and OpenAI? I do have SpaceX and OpenAI fractional shares. Yeah, they're not worth much, but I guess it's better than nothing. So let's have a look at a Broadcom stock, if it moves or not. Don't know how we do it in the after hours. Can we do it? After hour stuff here in the, maybe. Yeah, we can. Okay, cool. Cool. If the numbers are out, just let me know in the chat and we'll try and pull up everything you need to know from Broadcom. So maybe less than a minute. Let's do every second. Well, every second is crazy. What do you mean? I can't even have this. Okay, so I guess I pay for this thing and I get a minute limit. Okay, cool. Well, not really cool, but that's just being very greedy, trading view. Very, very greedy. All right, it is what it is. Use Webull, but then I have to create an account on Webull, and I'm already integrated in the whole trading view watch list and all of that. But for now, let's focus on this. Actually, I can put this on. Well, I'm much better. Where I put it in semiconductors, yes. Okay. Voila, much better. Now we're set. We can even see the other things. Très bien, magnifique, wunderbar. So, anything else that gets reported? Robinhood Legend. I mean, there's no point in me getting Robinhood if I can't even use the brokerage. Since I am in Belgium and I just moved to interactive brokers. But yeah, the moment I get the full suite of Robinhood capabilities, like in the US, I am probably switching everything to that. What do we have? American Eagle is also reporting. Okay. Hide the indicators. Why? I like it. But okay, you know what? Since you asked so nicely, we'll hide this. I do want to keep this. This gets kept on. Okay, that's it. Okta. Apparently Okta reported. Yes, Okta did report. Let's see if we can find an earnings report, or at least the highlights of it. So we have Okta, apparently American Eagle. Okay. Didn't Abercrombie and Fitch report today as well? Although they did do a pre-announcement a couple of weeks ago, which wasn't great, which is why the stock went down. Yes, Abercrombie did it before the open. Wix reported before the open. Now we do have Broadcom, Rigetti, Viva, Okta, and Webull as well. Ah, interesting. Okay, maybe Rigetti is more. Whoop. Actually, we can do a watch list, no? No. We can do an extra watch list or not. Create a new list. Look at this. Earnings. Poof. What do we want to add? We want to add Broadcom. We want to add Rigetti, Okta, American Eagle, something like this. What did I say? Something else? Viva Systems. And I think that's enough. So it should be enough. I already added 3 names that I have no clue what they do. Webull. That's also a good one. Up. It's a good ticker. I'll give them that. It's like C3AI. The only good thing that they have is a ticker. Other than that, it's a shitty business, if I do say so myself. Okay. Rigetti is down 2. Okta is down just 1.1%. American Eagle was up. Okay, American Eagle is shooting up. 8%. If we're being honest here, we do know why. Viva is up 4.6. So Broadcom is flat, so I assume they do nothing. They have no report that came out as of right now. Let me check the usual people on X to see if something is out. No. There are a lot of analyst conferences, by the way, happening every single day, this week, next week. So if you see a stock being up a lot or down, you probably know that it's probably because management has said something during that analyst conference. The new PayPal CEO has taken charge of the company. What is he going to do with it? Hopefully he does make it leaner, meaner, and the stock goes up, and then he sells it for even higher premium. So my options are worth a little bit more. Wishful thinking. But yeah. Okay. What do we have? Let me do this. Put this here. Voila. Much better. Ta-da. So, American Eagle, double beat. 18% beat on EPS, 3.45% beat on revenue. Revenue is up 9.7% and EPS is up 55.5% year over year. Not bad. ChargePoint, I don't know who owns this thing, so we skip that. Rigetti, barely making any money. I'm sure people in the chat make more than this. Revenue is actually down 17.8% year over year, and that's a 19% miss. EPS was in line of a loss of 3 cents. Okay, cool. It's probably still a quantum company that's worth billions of dollars while generating pennies. Viva Systems, double beat here as well. EPS growing 18.39%. That's a 6.19% beat. Revenue is up 16% year over year and a beat of 3%. All right. We're still waiting for Broadcom. So right now we have Rigetti that's down only 2%. This is a company, it can't be. What's the market cap? $5.9 billion. And what did they generate? $2 million in revenue? I don't understand this. Like, and NVIDIA is a company that is growing, that is a $4.3 trillion company, growing 70%. And that gets a, what did we say, 22 times forward multiple on earnings? While Rigetti is a $5.9 billion company generating, what was it, this quote, 2 million, losing money. It doesn't make any sense. It doesn't make any sense. The market is sometimes unfair. American Express is now American Express, American Eagle, American Express. Only up 3.3. Viva is up 5.3. Okay. And Broadcom doesn't move. Webull 1.2, but Webull, they did come out, but we didn't see. Sometimes unfair. Yeah, some might say always unfair. Let's see if Webull, we have something. Okta did also experience a double beat. Revenue grew 11% year over year and EPS 15. Well, where are we? Wow, 6.2. This thing was on paper cheap when even it was at $10 or so. But I guess it's even better at $6. Broadcom, still nothing. So I assume it's, what is it? We're now 10 past, maybe another 5 minutes, like the usual stuff, 15, or it does an NVIDIA and we have to wait another 20 minutes. That's also possible. But for now, this is what we're getting. What are the other Any other company that does something on our list here? No, most of them are down a little bit after hours, but not by much. Big tech, nothing. Bitcoin, 73,000. Okay. No, not much. Not much. Okay. So for now we have this. Webull already reported. Yeah. Webull already reported. But I couldn't find the quick overview unless you want me to go and have a look at the full report, which technically speaking, we could be doing as well. So let me go to their investor relations and we're going to have a look at it. Actually, let me maybe close the poll already because otherwise you will manipulate it. Webull, where are you? Investor relations, earnings. Okay. Let's have a look at what you guys think might happen. Chelsea's up 4-1. Yes, I know. I am watching the game with one eye. I was very pissed in the first half when it's a João Pedro hat-trick. I was very pissed in the first half that we conceded after 2 minutes. Terrible. Okay, so 69% of you say that we should be going up. It's a very nice number, you guys. You see, teamwork makes the dream work. 69% say up, and then, of course, 31% say down. Where is Webull earnings presentation? This is it. Okie dokie. In the meantime, let me check. Nothing moves here. Okay, so we have time to look at Webull real quick. If Broadcom comes out, do let me know in the chat by freaking out. I do have Zeta on my watch list. I have had Zeta on my watch list since $12, but no, I did not comment on it when they reported earnings, probably because I was busy with something else, I guess. But some other people took over the Zeta train, so it's good enough for me. All right, revenue. This is for the full year, up 46% year over year. That's good. Adjusted operating expenses up 24%. Adjusted operating profit did also improve, so that's good. But I do want to see the magical number because they increase the amount of people that use the platform, but they don't monetize them. Funded account is only up 8%. You see, that's the problem. Customer assets, that's up 81. That's fine. Deposits are up 91, so that's good. This is fine. The roadmap we don't care for now. For Q4, okay. So for Q4, again, this is the problem I have with Webull, is that it seems like people like the platform, but they like the platform because they can do it, they can use it for free. The watch list, the screeners, and things like that. So you see, registered users are up 15% year over year, whereas funded accounts is only up 8%. And the quarterly retention is actually down. It's now 96.9%, was 97.7, was 97.1, 0.5, and then a year ago was actually 98.3. They are growing, but they should start to try and monetize these registered users way more. Because they have a good product, otherwise they would not see this amount of increase. And that's the problem. That's why I don't see this becoming a Robinhood, despite maybe having a potential of doing something, but I don't see it become a Robinhood. All right. You're all pinging me for the Broadcom one, so I assume Broadcom is out. And it is out. It is out and down a little bit. It's very dramatic, these types of candles on the minute. It's like a difference of $7. It's down 1.3%. So okay, let's give it a couple of seconds. Marinate in the redness here. It's down a little bit more now. 2.8, 2.7. Let's see if I can pull up the report from their website, which looks like a very old website. Let me refresh. They did. Okay, they did. Let me also check something else. If someone has the quick, did they beat or did they miss? And then we're going to do the full earnings report. Voilà, parfait. What do you guys think? Double beat, double miss, miss and beat, mix and match. What do you think? Let me know in the chat. I already have it here, I know, but I'm giving you a couple of seconds to write it in the chat so I can see who was wrong and who was right. In the meantime, Newcastle, Manchester United, it's 1-1 and Newcastle are playing with 10. I am slower than Molasa with no sense of urgency because why are you running? Where are you running to? The markets are closed. The report is just out. The earnings call is in 50 minutes. There's nowhere to go. There's nowhere to go. You have to chill. You have to chill. You know, when I was in Cape Colker in Belize, there was a guide there that told me, that said, you know how I can see the difference between a tourist and someone that lives here? He said, tourists walk as if they're stressed out of their lives, while people that live here, when they walk, they are completely relaxed. And you know what? Since then, I'm like, this guy has a good point. What's the rush? There's no rush here. These are the results. Nothing will change. These are the results. It's already out. The algos have already read the report 1,000 times, have pulled the stock down 3 times already. And guess what? The stock is now actually flat. So we didn't miss anything. We didn't miss anything. Anyways, it's a double beat, but a very, very small beat. Earnings per share beat by 1.49%. It's up 28% year over year. And revenue is up 29% year over year. A beat of not even 1%. So I was expecting a little bit more, not gonna lie. So I like this. View printer friendly version. That's a good way to pull it. They usually come out with a presentation a bit later. So what do we see? Cash from operations, $8.2 billion. CapEx of 250, so just over $8 billion. Dividend has been paid out, 65%. Second quarter fiscal 26 revenue guidance of approximately $22 billion, an increase of 47% year over year. Adjusted EBITDA guidance of approximately 68% of projected revenue, and a new $10 billion share buyback program. Okay. What does our Hoktan say here? Broadcom achieved the first record first quarter revenue on continued strength in AI semiconductor solutions. Q1 AI revenue of $8.4 billion grew 106. Okay. AI revenue, $8.4 billion. That's up 106% year over year, above our forecast, driven by robust demand for custom AI accelerators and AI networking. Our AI revenue growth is accelerating, and we expect AI semiconductor revenue to be $10.7 billion in Q2. So that's a almost $2 billion increase quarter over quarter. Not bad at all. Consolidated revenue grew 29% year over year to a record $19.3 billion. Okay, we've seen those numbers already, so we can skip that actually because we just read through that. And since people here are in a rush, we have to go through these things faster. Free cash flow up 33% year over year for the quarter. Do we have the full year numbers here? No, because we are already in the new fiscal year. Okay, cool. As for the rest, nothing much. Maybe I should find out if they beat on the guidance numbers or not. Let's see if someone actually, I hope someone already has those numbers. No, they do not. No, they do not for now. Or maybe they do. He should have those numbers. If he doesn't, then I guess people are slacking right now. Shame on them. Wall Street Engine. Let's see. Aha, Wall Street Engine has them. Very nice. Thank you very much. Okay. So as you can see for the quarter, we've got beats across the board. Semiconductor Solutions, also a nice small beat, but still a nice one. And Q2 guide, they also beat. So market was expecting 20.5 billion. They're guiding for $22 billion. So that's a nice beat of $1.5 billion. Very nice. Free cash flow we've seen, margins we've seen, and dividend as well. Oh, $7.8 billion in one quarter? Huh. Okay, cool. And stock is flat. Voila. Let's pack it up and we're done. What do the others do? Nothing. Micron is flat, Nvidia is flat, AMD flat, Applied Material, everyone's flat here basically. So muted response at the moment from the market. More things will be said, of course, during the earnings report. Probably some questions about potential new clients, new big orders from clients. Wouldn't be surprised if Google just buys everything there. $10 billion. $10 billion when 60 times earnings is beyond stupid. Remember, just because there is a $10 billion buyback doesn't mean they have to buy it right now, right? It just allows them to use it whenever they want. So if the stock does crash, then they can buy it. 60 PE, it's high, but let's see. Let's check something real quick. Yeah, no, it's not that stupid. Let me show you. Let me show you something. Let's do forward PE. For those wondering, the call is in 37 minutes. So do have time. You have time to go take a shower, to actually go to the gym for a quick pump session, and then come back. Or just chill here and wait. That's also a possibility. Forward PE. Okay. So this is basically what we have. Has a forward PE right now of 30.7, although we've seen before 32. It's something that I have to clarify with fiscal because it's very, very strange here. So what do we have? Next 12 months, 30.7 times. Then 21.8 for fiscal 27, that drops to 17.6. Okay, whatever happens in 28 and 29, we don't know. If you just want to focus on the next two fiscal years, so fiscal 26, 27, it's not that crazy. We dropped from 30 to 21. Let's call it 22 times. Even if it's 31, whatever, it's not crazy. It's not super, super expensive. And again, it's not a company that's growing 5%. No, it's a company that's growing quite fast, becoming very important in this whole ecosystem. So not the craziest one. Of course, the trailing P is much, much higher than this, but you're not buying the past company, you're buying the future company. So again, the $10 billion allows them to use it whenever they see that the stock is undervalued. This is probably a company that does buy every quarter X amount of shares, and it doesn't really matter what price it is. I assume that's it. So 69% of you currently were correct because the stock is up 0.2% at the moment, not by much. So we'll see. Rigetti is down 5. Okta doesn't move. Probably hasn't moved in a long, long time. It's $72. I remember it was $70, I think, 6 months ago. Ooh, American Eagle gave back all of its gains. This is what happens when, never mind. I was going to make a very good joke, but I'm keeping it family friendly. Viva is up 7.7% and Webull is now down 2%. Beating expectations is disgusting. Warren Buffett said, beating expectations is disgusting. We are good. Okay. He does have some good quotes. Charlie as well. Charlie also has some good quotes. I do wonder how, actually, let's actually go here and see. Viva. Come on, Viva Systems, load up. Credo, I think, has been hit for no reason. Okay, so Viva provides cloud-based software for life sciences industry. Okay, it's a $30 billion company, trailing P 36, forward 22, probably fluctuates around those numbers. Or who's calling me here? I am busy. Don't disturb me. Over the past 12 months, stock is down 13.9%. Year to date, it's down 14%. Okay. Weird comment in the chat. Interesting. But I don't know the company that well. Credo, I did cover it once or twice. If it wants to load. I guess so many people are using it right now because of the earnings that is taking too long. But yeah, Credo, I think went under $100 or so. It's actually, forget it. Let's do this. Let's check Credo. Yeah, okay, it rebounded above 102. They crushed earnings and the stock still went down. Maybe it was too expensive. Okay, fine. But I don't think it was a price to perfection or something like that. And it's very important. Must be booty call this hour. No, not at all. Not at all. I do wonder what people want from me at these hours. Because usually, no, nothing. All right. Nothing moves. Pretty boring. Pretty boring after our action here. Broadcom flat, Rigetti 3.7, Okta a bit green, American Eagle flat, Viva up 7, Webull down 2. Okay. Not too bad. What's my biggest position? The biggest position actually right now is, I think, Nebius. Or maybe it's Alphabet. No, it's Nebius. It's Nebius and then Sofi and then Alphabet. It was Sofi, Alphabet, Nebius, but since Nebius has been performing very well actually year to date and the others have gone down a little bit, it has flipped. I'm not complaining at all actually. Not even a little bit. Rubrik reports next week, no? I think Rubrik reports next, the 12th. I know dLocal and Rubrik are reporting soon. Let's see. Yeah, Rubrik the 12th of March. We're going to cover it in a video probably. And dLocal 2 weeks. Okay, so we still have time. Okay. We still have time for that. I mean, after CrowdStrike's report yesterday, I would be very surprised if Rubrik doesn't. We already know actually because they are already pre-announced their earnings. We already know they're going to crush it, and I assume guidance is going to be a good one as well. Where is the comment here? You short Nebius when it reached $108. I assume the previous time it reached. You don't have to apologize. You allowed me to buy more shares. Rubrik should triple beat. We definitely know they're going to double beat, because that's what they told us already. And then the beat on guidance, I am expecting the same as last time. So yeah, I'm expecting a triple beat. Broadcom, for those that are joining us right now, they reported a double beat. Didn't beat by that much, but it looked like a good report. Triple beat, actually, because they also beat on the next quarter guidance. And now we are just waiting for the earnings call, which will start in 28 minutes. So in the meantime, let's actually have a look if we can find something interesting on CNBC. Let's have a look. Yeah, the upcoming Micron earnings. I'm fully expecting another record quarter by Micron. Fully expecting. The question will then is probably going to be on, okay, what happens next? How much visibility do you have for the next maybe 12 months or so? Are you sold out of this year? Yes or no? My guess is yes. Then we're going to see what happens with HBM4E. I think that starts 2027, if I remember correctly. But yeah, the thing with Micron is that I've taken already some nice profits that whatever happens right now, I have zero issues. If the stock goes up, great. If the stock goes down, okay, not that great, but I already secured a ton of profits from that position. And look, if it continues to go up while some other positions do not, and then I feel like Micron, maybe we might be getting stretched or close to a top, or purely I don't feel comfortable with these questions of whether or not the memory cycle is going to peak soon, whether or not Samsung and SK Hynix are going to take over even more market share or recover some market. Like, if I start to ask way more questions than I have answers, then maybe it's time for me to move on and put it into something else. But for now, I'm comfortable owning what I have. Has anyone said anything interesting today on CNBC? Probably not. I've seen Tom Lee yesterday, I think. Maybe we could listen to our friendly neighborhood bull, which is Tom. He says markets are making what looks like a bottom, but I think we already seen that clip. No, I do not have Broadcom. I have Micron and AMD as now semiconductors. I used to have Intel shares and then options. And then, of course, I have Nebius and CoreWeave and Iron. And 5 shares of NVIDIA, of course. Very important. Very important to have 5 shares. Iron upgrade to 150,000 GPUs. Is this a new announcement that they made, or is this something we already knew about? Let's see. Iron Investor Hub. Because they used to give us, yes. Thank you for the heads up. Okay, so we do have some news here. They announced it has entered into purchase agreement of over, interesting, 50,000 NVIDIA B300s. Okay, so not GB300, B300s here. So they will expand their total fleet to 150,000. They expect to deploy the additional GPUs in phases through the second half of 2026 across its existing, air-cooled data centers. So that's the thing that people don't fully like with Iron, is that they're focused now a lot on air-cooled and not liquid-cooled, which is probably why these are B300s. Okay. Then they just repeat the same thing that we've known about from before. And they did not, so they did not add any AMD GPUs, I assume, because otherwise they would have announced that as well. They established an at-the-market equity program as part of its broader capital management framework. The program is intended to complement existing and new funding sources. Okay. All right. Cool. Why is Iron down on this news? Well, it was up, 15% today, so I guess it's just a small pullback right now. Or maybe because the market just wanted to hear the amount of GPUs that are already online. Because remember, with Iron, the whole thing here is we have the energy, blah, 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 blah. But at the end of the day, you have to hook these GPUs up and start generating revenue. In this case right now, they're spending money, right? Just like with CoreWeave last week, they're spending a lot of money to eventually make a lot of money. The market in the meantime is like, okay, cool, you are spending a lot of money, but we want to wait and see how much money you can actually make from all of those investors. And in Iron's case here, I guess also a small problem is the fact that these are all for air-cooled data centers, and the focus on liquid-cooled is not high up in the priority list, I would say. Although they will have the capabilities to do that as well. It's just that right now the air-cooled ones are there because that's what they used for the Bitcoin mining stuff. So it's quite easy to replace that. And maybe the fact that this is, again, a second half of 2026 story might be why the market pulls it down a little bit. Do you think if SoFi won't get into the S&P 500, it will dump, even though most people are not expecting it? Do I think it will dump? No. Yes, on the same day, yes, just like every single time it happened before. But my expectations are that it will enter this year. Not this quarter, but this year. And as I've said before, I don't really care because it's just a question of when, not a question of if it will happen. But yeah, maybe on the day that whoever gets in and SoFi not, maybe then the stock drops 2% after hours or something like that. But I don't think it's a big deal. People pay way too much attention to the S&P 500 inclusion as if this is like a thesis making stuff. It doesn't really matter. It really does not matter at all. Correct. Different businesses. Rubrik is not part of the AI story, whatever Credo is. For some reason, the market didn't like the numbers, although the numbers look very well. Maybe it's a valuation story. Although Rubrik technically is not profitable, they do generate free cash flow, but operating margins and things like that are still negative. But 3 months ago, Rubrik also reported a triple beat. Stock went up after it went down because, what are these losers' name? Commvault. They reported not great earnings, and the market freaked out and said, oh, if they report bad earnings, then Rubrik is definitely going to report bad earnings. And you know what happened? Well, Rubrik is taking market share, and the rest is a short-term history right now. Stock Dylan, hello. Everything's good here for now. For now. Okay, pretty good after hours action, I would say. Who's down the most? It's only Iron down 2%, but it's really not the crazy thing. All the rest, still fine. What do I think about the Stripe PayPal story? I've talked about it a little bit during the portfolio update on Sunday, or portfolio episode, basically. It's where there is smoke, there is usually fire. I think it's just a premature report and rumor that came out because the new CEO has taken charge. I think the first day was yesterday or 2 days ago. I think he will first probably make some changes inside the company, probably also some layoffs. If they do what Block has done, which is lay off quite a lot of employees, I think that the stock goes up by quite a lot because I don't think PayPal needs 23,000 employees. I sure hope that all of these employees get even better jobs elsewhere, but the company itself doesn't need 23,000 employees for what they're doing right now. And then if they were to sell at today's price, which is $45 per share or 46 or whatever, they would sell it at a small premium, just like every other acquisition out there. But is that premium going to be enough? Probably not. Could they demand a 40% premium? I mean, if I were in charge, I wouldn't sell for $70. Although $70, $75, probably I'd say yes. Just take it. Just take it, leave me out of it. But for less, like $60, $50, there's no way. There's no way you're getting a company that's still generating $6 billion of free cash flow as, what was it, $475 billion of TPV every single quarter. Huge vault worldwide with data and payment storage and things like that. There's no way you're letting this go for less than $50 billion or so. And so that's the problem. I don't see who gets to buy it. You could speculate that Stripe would like to buy PayPal and in the way do a reverse IPO. Like you buy the company and when you go public as PayPal or as Stripe in this case. Which, okay, I guess it's a good way of doing it because Stripe is worth probably 3 times what PayPal is worth. We don't know how much free cash flow Stripe is generating, but in the private market, they definitely are worth, what was it last time, $140 billion or so? So wouldn't be the craziest thing. Me with my options, if you tell me that PayPal tomorrow is getting sold or next week for $70, thank you very much. I sell, I'm deep in the green then, from red to green. And we're not looking back. We're not looking back. We're looking forward. What's my opinion on tomorrow? I don't know. Tomorrow is Thursday. Poof, mind blown. Tomorrow is Thursday. I don't know. Today was a very green day. Yesterday was a okay day as well. So tomorrow could be very red. We don't know. It could be another green day. We could have now another couple of weeks of green. If I had a crystal ball, trust me, I would have sold that crystal ball for billions of dollars and be retired right now, but I don't know. I don't know. What I do know is that a lot of companies are still trading at very, very nice valuations right now. Like even especially the big tech companies, like an Amazon, a Meta, things like that. They are all trading at pretty good valuation. Why are all of you YouTubers talking SoFi ignoring the big macro headwinds for SoFi? Employment and inflation are not signaling further rate cuts, which means less revenue for SoFi. Why? SoFi themselves have very negative macro assumptions. I don't think unemployment is going to rise to 5%. I think their assumptions for rate cuts is 2 for the year. I think we're going to get 2 rate cuts this year. So it's not like SoFi is not aware of the potential deterioration of the macro situation. I honestly think people are delusional if they think interest rates are going to be increasing anytime soon. I don't see that happening. And if it does happen, then I guess I'll have to make a huge apology video, but I just don't see interest rates going up. It's not going to happen. How many rate cuts are we going to get this year? I think we're getting two, at least two, maybe two maximum, but two is what I think will happen. I think that's what SoFi is expecting as well. And again, their scenarios that they've put out is 5% unemployment. We're far from 5% unemployment. And so I don't see major macro headwinds for SoFi at all, actually. Now, if you're going to tell me that in 2028, the Citrini research report said that, AI agents are going to take over and employment rate is going to go through the roof and agents don't need savings accounts and SoFi accounts and whatever and blah, blah, blah. And you might not even need a bank, because who needs a bank when money has no value and you don't need anything, because everybody's going to have a million agents working for you, doing your groceries, even though it has no clue what you want to eat right now, but it decides for you and you have nothing to say. Then okay, fine. But if we're going to go and look at these types of silly scenarios, then what's the point of investing? Because I can put a pin in every single thesis that you're going to make with some ridiculous assumptions. Look at the realistic things and then make some assumptions. But yeah. Why didn't he call me? Because I don't talk a lot about Hood, despite me being one of the only ones talking about it at $8 and $10 with Arnie. Plus, I'm not American, so I guess that's why. Although, as a European, I do think maybe he should, if he wants to pivot to Europe or grow into Europe. How do I argue that when other central banks are raising due to inflation, last hurdle with low employment? Who raised interest rates? That's again, if you look at the trends in the US, because we're talking about the US, why would they raise interest rates? If unemployment is going to be the issue, raising interest rates is not going to help the cause. And it's not like inflation is out of control. It's actually, on the contrary, it seems to be quite under control. Yes, there are still some things that could be better. But, for example, housing, the housing market, lower interest rates, you build way more, you increase the supply, prices of housing and all of that should start to increase. The housing market is honestly the easiest problem to solve, and yet nobody wants to solve it. You just increase the supply to match the demand, or maybe even do even more than that, but you just need to let the builders build. Because at the end of the day, the most basic thing that people want is to have a house of their own or an apartment. Or if they want to rent, then you can rent, but at least like paying $5,000 or $6,000 per month. Imagine starting your month in -6 or 5,000. It's insane. It's actually crazy. The European mind could not comprehend. Do you know, with the SoFi deal with MasterCard, do they get a % of transactions? I don't know. I have not looked at it with the SoFi stablecoin thing. I have not looked at it in that. So I don't know if they get a % of transaction, or it's purely, I assume they're because Anthony Noto did talk about it. So I assume they have to make some money in some ways with this deal. But I don't know how. I don't know how. Well, we can figure it out when we read the report, I guess. Although I highly doubt they explicitly say how they make money from it, but we'll probably get more answers pretty soon. They have an analyst conference maybe next week or something like that. Robinhood headquarters in Bruges. I mean, if Robinhood comes into Europe, I assume they would like to go into a big city. I highly doubt Bruges is the place to go. I mean, in the UK, they're already there. So London is the logical step. Frankfurt might be a good hub for them. Or München, but Frankfurt I think is a better hub. What do I think of Open Door? I mean, we made a lot of money with Open Door because we talked about it at $1 and then it just went on a crazy, crazy run. I'm out of it. I've been out of it for a while because, I mean, if you can get a 10x or a 7x in like a month or so, you say thank you very much and you just run. It's still at $5. I mean, the new management seems to know what they're doing, but the new management is still going to be either very successful or not successful based on what is going to happen also with interest rates, because that does make or break a market. But it seems like they're doing a bit better for now. If sells for 70, then your options go to 0. The strike price is at, but if my options are $70, but January 27, and I'm getting $70 today, why is it going to 0? Can someone explain to me? Like my options expire in January 27. $70, that's the strike price. If I'm getting $70 today or next week, isn't that a good thing? Or am I missing something out because it's getting acquired and it cannot go above 70, or I don't know. Yeah, Broadcom is in 7 minutes. And yes, I am covering it. 7 minutes, Broadcom earnings call. Financial reasons, yes, Frankfurt, yes, which is exactly why I mentioned Frankfurt. Tech reasons, München. Yes, correct. Football as well. In Bavaria. Someone is buying PayPal? Yes, I am buying PayPal. I am doing a leverage buyout, buying the whole company. Fun times. Fun times. Why do people want me? No. Let's see. When are you going to cover Grab Holdings? I mean, I think Amit did already a pretty good job, right? They reported, and this thing just literally doesn't move. It's either always at $5 or always at $4. But if I can be very, very honest here, Mercado Libre is a much better play. Much, much better. I mean, better play. It's a completely different demographic and all of it. It's Latin America, whereas Grab is Southeast Asia. And I've talked about Grab a lot of times. You get huge GDP growth in these countries, Southeast Asia. But I still think Mercado Libre, if you're looking for emerging markets, exotic markets, I don't think there's anything better with Meli. dLocal is, of course, for the payment side of things. I think New Holdings is also a wonderful company with great management. I like Latin America. I think there's a lot of potential in the Latin American markets. I do have some family there, so I do have some connection and see what's going on there. But there is a lot of potential in those markets. Brazil, yes, there is an election later this year. We'll see how that goes with the drunken guy there. But yeah, Venezuela being a little bit more free-ish right now could help. Argentina doing better. Still is Mexico, some other countries. Mexico is Central America, but yeah, there is some potential for sure. Thoughts on this is always those questions. Thoughts on Nu or SoFi? there's no comparison. It's like when people try to put SoFi against Robinhood, it's like it's not a football game. There's no this versus that. Plus, Nu right now, yes, they are trying to enter the United States, but their full focus is still on their core markets. Mexico is North America, but where do we draw the line? I guess you draw the line at Mexico being North America. So yes, I guess that makes sense. Even though you could technically put it at Central America as well. The last part of it. But okay, fine. I'll give it to you. 3 minutes. 3 minutes until until our Broadcom earnings call is starting. My only problem with Meli is it doesn't rely on one country doing good, it relies on 5. Isn't that a good thing? Plus, for now, a lot of their focus is Brazil, which I guess you could say is an issue. But this should be a good thing, being diversified. Because let's say if one country's political government is suddenly going super left or right or whatever, you don't want your whole business to be focused just on that. I think having 5 countries here is a bit better. And is that Fernando Alonso in your profile picture? I think so, no? I think so. My largest holding, right now is Nebius, but it can switch. If SoFi goes back to $20, then it's going to be SoFi. It is the largest holding because it has increased by so much, which I'm very happy, very comfortable with. Thank you very much for joining. Have fun at work. You can always put us on the site and have a listen to the earnings call, because right now I do have a break of, I think, 40 minutes where Hock Tan is going to talk and explain to us why they are making billions and billions of dollars. They don't want to talk with the small player. We only talk with the big players. Every earnings call, he has to make sure that the market understand that Broadcom is not playing with the small kids. They're only playing with the big boys. Have I considered? First of all, it is still expensive. With Mercado Libre, you're never, or not never, I can even never say never, but you will rarely get it for cheap. You're just getting it for less expensive. But world-class companies are rarely cheap. All right, let's see what kind of music Broadcom has for us today. Let's do this. Keep me logged in, submit. No music. Huh. Interesting. Hello. Oh, wait. The music is here. There is some cool southern guitar music playing. We've had worse, but I'm not going to put it on because they are all using copyright music. Are they starting or are they not starting? No, they're not starting. How the hell did your position... Well, with SoFi, you had to endure almost 3 years of the stock being under $10 and people laughing at you and saying that you're a bag holder because the stock was at $8 and you were accumulating those stock at $8. And now that it's back close to $20, you are reaping the benefits of that. And Nebius, we were just early. Company popped up on the radar, looked into it, covered it in January of $21. Very interesting company. And the rest is history, I guess. But then I have a small screw up because I decided to buy Duolingo to put it at 2.5% of the portfolio, and now it's 1.2% of the portfolio. Put too much money, too much dollars into a small position that was supposed to be even smaller than that. The company decided to then change strategy. Hopefully it does play out for them, but the thing with Duolingo is that it's not expensive right now, especially not if their strategy works out. Do you think that's what will happen with Grab? What do you mean? Did you do that because of Amit? I actually covered Grab before Amit. The call is starting.
Head of Investor Relations of Broadcom Inc.
Thank you, operator, and good afternoon,
The volume
everyone.
is as high as possible.
Joining
it's
me
their
on
fault.
Today's call are Hock Tan, President and CEO, Kirsten Spears, Chief Financial Officer, Charlie Kawaz, President, Semiconductor Solutions Group, and Ram Velaga, President, Infrastructure Software Group. Broadcom distributed a press release and financial tables after the market closed, describing our financial performance for the first quarter fiscal year 2026. If you did not receive a copy, you may obtain the information from the investor section of Broadcom's website at broadcom.com. This conference call is being webcast live, and an audio replay of the call can be accessed for 1 year through the investors section of Broadcom's website. During the prepared comments, Hock and Kirsten will be providing details of our first quarter fiscal year 2026 results, guidance for our second quarter of fiscal year 2026, as well as commentary regarding the business environment. We'll take questions after the end of our prepared comments. Please refer to our press release today and our recent filings with the SEC for information on the specific risk factors that could cause our actual results to differ materially from the forward-looking statements made on this call. In addition to U.S. GAAP reporting, Broadcom reports certain financial measures on a non-GAAP basis. A reconciliation between GAAP and non-GAAP measures is included in the tables attached to today's press release. Comments made during today's call will primarily refer to our non-GAAP financial results. I will now turn the call over to Hock.
Thank you, Chi, and thank you everyone for joining us today. In our fiscal Q1 2026 total revenue reached a record $19.3 billion, and that's up 29% year on year, and exceeding our guidance on the back of better than expected growth in AI semiconductors. This top-line strength translated into exceptional profitability, with Q1 consolidated adjusted EBITDA hitting a record $13.1 billion, which is 68% of revenue. These figures demonstrate that our scale continues to drive significant operating leverage. Now, we expect this momentum to accelerate as our custom AI XPUs hit their next phase of deployment among our 5 customers. So looking ahead to next quarter, Q2 26, we're guiding for consolidated revenue of approximately $22 billion, which represents 47% year-on-year growth. Let me now give you more color on our semiconductor business. In Q1, revenue was a record $12.5 billion, as year-on-year growth accelerated to 52%. This robust growth was driven by AI semiconductor revenue, which grew 106% year-on-year to $8.4 billion, way above our outlook. In Q2, this momentum accelerates, and we expect semiconductor revenue to be $14.8 billion, up 76% year-on-year. Driving this is AI revenue growth, which will accelerate very sharply to 140% year-on-year to $10.7 billion. Now, our custom accelerator business grew 140% year-on-year in Q1. This momentum continues in Q2. The ramp of custom AI accelerators across all our 5 customers is progressing very well. For Google, we continue our trajectory of growth in 2026 with strong demand for the 7th generation Ironwood TPU. In 2027 and beyond, we expect to see even stronger demand from next generations of TPU. For Anthropic, we are off to a very good start in 2026 for 1 gigawatt of TPU compute. And for 2027, this demand is expected to surge in excess of 3 gigawatts of compute. Our XPU franchise, I should add, extends beyond TPUs. Now, contrary to recent analyst reports, Meta's custom accelerator MTIA roadmap is alive and well. We're shipping now, and in fact, for the next generation XPUs, we will scale to multiple gigawatts in 2027 and beyond. Rounding off for customers 4 and 5, we see strong shipments this year, and which we expect to more than double in 2027. We also now have a 6th customer. We expect OpenAI deploy in volume their first generation XPU in 2027 at over 1 gigawatt of compute capacity. Let me take a second to emphasize our collaboration with these 6 customers to develop AI XPUs is deep, strategic, and multi-year. We bring to the partnerships, each of them, unmatched technology in SerDes, silicon design, process technology, advanced packaging, and networking to enable each of these customers to achieve optimal performance for their differentiated LLM workloads. We have the track record to deliver these XPUs at high volumes at an accelerated time to market with very high yields. And beyond technology, we provide multi-year supply agreements as our customers scale up deployment of their compute infrastructure. Our ability to assure supply in these times of constrained capacity in leading-edge wafers, in high bandwidth memory and substrates ensures the durability of our partnerships. And we have fully secured capacity of these components for 26 through 28. Consistent now with the strong outlook for our XPUs, demand for AI networking is accelerating. Q1 AI networking revenue grew 60% year-on-year and represented 1/3 of total AI revenue. In Q2, we project AI networking to accelerate a lot more and grow to 40% of total AI revenue. We are clearly gaining share in networking. Let me explain. In scale out, our first to market Tomahawk 6 switch at 100 terabit per second, as well as our 200G SerDes, are capturing demand from hyperscalers, whether they use XPUs or GPUs this year. This lead will extend in 27 with our next generation Tomahawk 7 featuring double the performance. Meanwhile, in scale up, as cluster sizes and our customers expand, we are uniquely positioned to enable these customers to stay on direct attached copper through our 200G SerDes. As we next step up to 400G SerDes in 2028, our XPU customers will likely continue to stay on direct attached copper. And this is a huge advantage, as the alternative of going to optical is more expensive and requires significantly more power. Reflecting the foregoing factors, our visibility in 2027 has dramatically improved. Today, in fact, we have line of sight to achieve AI revenue from chips, just chips, in excess of $100 billion in 2027. We have also secured the supply chain required to achieve this. Now, turning to non-AI semiconductors, Q1 revenue of $4.1 billion was flat year-on-year, in line with guidance. Enterprise networking, broadband, server storage revenues were up year-on-year, offset by a seasonal decline in wireless. In Q2, we forecast non-AI semiconductor revenue to be approximately $4.1 billion, up 4% from a year ago. Let me now talk about our infrastructure software segment. Q1 infrastructure software revenue of $6.8 billion was in line with our guidance. It's up 1% year-on-year. For Q2, we forecast infrastructure software revenue to be approximately $7.2 billion, up 9% year-on-year. VMware revenue grew 13% year-on-year. Bookings continued to be strong, and total contract value booked in Q1 exceeded $9.2 billion, sustaining an ARR, which is annual recurring revenue growth, of 19% year-upon-year. Let me reinforce that this growth in our infrastructure software business reflects our focus and investments in foundational infrastructure. And our infrastructure software is not disrupted by AI. In fact, VMware Cloud Foundation, VCF, is the essential software layer in data centers, integrating CPUs, GPUs, storage, and networking into a common high-performance private cloud environment. As the permanent abstraction layer between AI software and physical chips, silicon, VCF cannot be disintermediated or replaced. It allows enterprises, in fact, to scale complex generative AI workloads effectively with agility that hardware alone cannot provide. We are confident that the growth in generative and agentic AI will create the need for more VMware, not less. So in summary, let me put it all together. For Q2 2026, we expect consolidated revenue growth to accelerate to 47% year-on-year and reach approximately $22 billion. And we expect adjusted EBITDA to be approximately 68% of revenue. So with that, let me turn the call over to Kirsten.
Thank you, Hock. Let me now provide additional detail on our Q1 financial performance. Consolidated revenue was a record $19.3 billion for the quarter, up 29% from a year ago. Gross margin was 77% of revenue in the quarter. Consolidated operating expenses were $2 billion, of which $1.5 billion was R&D. Q1 operating income was a record $12.8 billion, up 31% from a year ago. Operating margin increased 50 basis points year over year to 66.4% on favorable operating leverage. Adjusted EBITDA of $13.1 billion, or 68% of revenue, was above our guidance of 67%. Now let's go into detail for our two segments. Starting with semiconductors. Revenue for our Semiconductor Solutions segment was a record $12.5 billion, with growth accelerating to 52% year-on-year, driven by AI. Semiconductor revenue represented 65% of total revenue in the quarter. Gross margin for our Semiconductor Solutions segment was up 30 basis points year-on-year to approximately 68%. Operating expenses of $1.1 billion reflected increased investment in R&D for leading-edge AI semiconductors and represented 8% of revenue. Semiconductor operating margin of 60% was up 260 basis points year-on-year, reflecting strong operating leverage. Now moving on to infrastructure software. Revenue for infrastructure software of $6.8 billion was up 1% year-on-year and represented 35% of revenue. Gross margin for infrastructure software was 93% in the quarter, and operating expenses were $979 million in the quarter. Q1 software operating margin was up 190 basis points year-on-year to 78%. Moving on to cash flow. Free cash flow in the quarter was $8 billion and represented 41% of revenue. We spent $250 million on capital expenditures. We ended the first quarter with inventory of $3 billion as we continue to secure components to support strong AI demand. Our days of inventory on hand were 68 days in Q1 compared to 58 days in Q4 in anticipation of accelerating AI semiconductor growth. Turning to capital allocation, in Q1 we paid stockholders $3.1 billion of cash dividends based on a quarterly common stock cash dividend of 65 cents per share. During the quarter, we repurchased $7.8 billion, or approximately 23 million shares of common stock. In total, in Q1, we returned $10.9 billion to shareholders through dividends and share repurchases. In Q2, we expect the non-GAAP diluted share count to be approximately 4.94 billion shares, excluding the impact of potential share repurchases. We ended the first quarter with $14.2 billion of cash. Today, we are announcing our board of directors has authorized an additional $10 billion for our share repurchase program effective through the end of calendar year 2026. Now moving on to guidance. Our guidance for Q2 is for consolidated revenue of $22 billion, up 47% year-on-year. We forecast semiconductor revenue of approximately $14.8 billion, up 76% year-on-year. Within this, we expect Q2 AI semiconductor revenue of $10.7 billion, up approximately 140% year-on-year. We expect infrastructure software revenue of approximately $7.2 billion, up 9% year-on-year. For your modeling purposes, we expect consolidated gross margin to be flat sequentially at 77%. We expect Q2 adjusted EBITDA to be approximately 68%. We expect the non-GAAP tax rate for Q2 in fiscal year 2026 to be approximately 16.5% due to the impact of the global minimum tax and the geographic mix of income compared to that of fiscal year 25. That concludes my prepared remarks. Operator, please open up the call for questions.
Thank you. To ask a question, you will need to press star 11 on your telephone. To withdraw your question, press star 11 again. Due to time restraints, we ask that you please limit yourself to one question. Please stand by while we compile the Q&A roster. And our first question will come from the line of Blayne Curtis with Jefferies. Your line is open.
Hey, good afternoon. Thanks for taking my question. It's just a clarification than the question. Just clarification, Hock, on the greater than $100 billion. I think you said AI chips. I just want to make sure you're clarifying the difference between the ASICs and networking, and didn't know how racks revenue fits in there. And then the question, I think the biggest overhang on the group here is that you grew roughly double in the quarter AI. I think that's what kind of cloud capex is growing this year. I'm just kind of curious your perspective. I think given the outlook that you have for 27, you should be a share gainer. I'm just kind of curious your perspective in terms of the pessimism that investors kind of think of that the hyperscalers need to get a return on investment in this year or next year, or if not the year after. I'm just kind of curious your perspective, how you factor that into your outlook.
Well, what we have seen over the last few months and continue to see even more is, and it's really not so much talking about hyperscalers, our customers, Blayne, is limited to those few players out there, and some of them are hyperscalers, some of them are not hyperscalers, but they all have one thing in common, which is to create LLMs, productize it, and generate platforms, be it for enterprise consumption in code assistance or agentic AI, or be it for consumer subscription that we know about, whatever it is that few prospects, and many of whom are customers now, who are creating this, whether it's generative AI, agentic AI, but creating a platform. That's our customer. And with respect to each of those guys, we are seeing stronger and stronger demand for compute capacity, for training, which is something they do need constantly. But what is very, very interesting and surprising to us is very much for inference in order to productize the LLMs, their latest LLMs they create, and monetize it. And that inference is driving a substantial amount of compute capacity, which is great for us because these players, these 5, 6 customers of ours, are on the path to creating their own custom accelerators, and beyond that, their own design architecture of networking clusters of those custom accelerators. So I think we're going to see demand keeps picking up as we've heard announcements in the past 6 months. Now, to clarify your first part, Blayne, when I say we forecast, we have a line of sight that our revenue in 27 will be significantly in excess of $100 billion. I'm focusing on the fact that these are pretty much all based on chips, whether they are XPUs, whether they are switch chips, DSPs. These are silicon content we're talking about.
Thanks so much.
One moment for our next question. And that will come from the line of Harlan Sur with JP Morgan. Your line is open.
Yeah, good afternoon. Thank you for taking my question, and congratulations to the team on the strong results. Hock, there's been a lot of noise around CSPs and hyperscalers embarking on their own internal XPU, TPU design efforts, right? We call it COT, or customer-owned tooling. This is not a new dynamic with ASICs, right? I think the Broadcom team has been through this COT competitive dynamic before over the 30 years, right, that you've been a leader in the ASIC industry. And very few of these COT initiatives have ever been successful. Now on AI, some of these COT initiatives are coming to the market now, but it looks like they're at least 2x less performant than your current generation solutions, 2x less complex in terms of chip design complexity, packaging complexity, IP. So maybe just a quick two-part question. Hock, one for you is, given your visibility into next year, do you see these COT science projects taking any meaningful TPU, XPU share from Broadcom? And then maybe the second quick question for either you or Charlie is, given that Broadcom's TPU, XPU programs from a performance complexity IP perspective are 12 to 18 months ahead of any of these COT programs, how does the Broadcom team widen this gap further?
Well, that's a great question. And, it fits into that. I purposely took the time in my opening remarks to say that when any, I guess, hyperscaler or LLM developer tries to become self-sufficient entirely in creating what you call a customer-owned tooling or COT model, they face tremendous challenges. One is technology, which is technology as it relates to creating the silicon chips, and particularly in XPUs, that they need to do the computing and that's needed to optimize and train and inference on the workloads they produce out of their LLM. That technology we talked about comes in from different dimensions. You need the best silicon design team around. You need really cutting edge SerDes, very advanced packaging, and just as much you need to understand how to network clusters of them together. We've been doing this for 20 years, more than 20 years, in silicon. And in this particular space today, in generative AI, if you're trying to, as an LLM player, to do your own chip, you cannot afford to have a chip that is just good enough. You need the best chips that is around, because you're competing against other LLM players, and most of all, you're also competing against NVIDIA, who is by no means letting down their guard. They are producing better and better chips with every passing generation. So you have to, as an LLM, trying to establish your platform in the world, have to create chips that are better than, if not competitive, with not just NVIDIA, but all the other platform players that you're competing against. And for that, you really need, our belief, and we see that firsthand, a partner in silicon with the best technology, IP, and execution around. And very modestly, I would say we are by far way out there. And we will not see competition in COT for many years to come. It will come eventually, but we're still a long way off, because the race which we see continues. And one thing I add in there that is particularly unique to us, when you create the silicon, you really have to get it up and running in high volume in production very quickly, time to market. We are very, very experienced in doing that. Anybody can design a chip in a lab that works well. Can you produce 100,000 of those chips quickly at yields that you can afford? And we don't see too many players in the world that can do that. Charlie?
I think you covered it very well, Hock.
Thank you, Hock. Thank you, Charlie.
One moment for our next question. And that will come from the line of Ross Seymour with Deutsche Bank. Your line is open.
Hi, thanks for letting me ask a question. Hock, in your script, you leaned a little bit more into the networking differentiation than you have in the past. So I guess kind of a short-term and a longer-term question. The short-term is, what's driving that up to 40% of the AI revenues? And the longer-term question is that percentage mix in that 100 billion plus, is that changing now what sort of leadership do you expect to maintain in that business, whether it's scale out or scale up? And is your leadership position there helping on your XPU side as you can optimize across both the compute and the networking sides?
Well, let's address the first part of that fairly complex question first, Ross. Yes, in networking, especially with the new generation of GPUs, XPUs that are coming out there, we're running at 200 gigabit SerDes out there in terms of bandwidth. And the Tomahawk 6 that we introduced over 6 months ago, in fact, closer to 9 months ago, we're the only one out there. And our customers and the hyperscalers want to run with the best networking and with the most bandwidth out there for their clusters. So we are seeing huge demand for this only 100 terabit per second switch out there. So that's driving a lot of the demand. And couple that with running bandwidth on scaling out optical transceivers at 1.6 terabit. We are, again, the only player out there doing DSP at 1.6 terabit. That combination is driving, I would say, the growth of our networking components even faster than our XPUs are growing, which is already pretty remarkable. So that's what you're seeing. But at some point, I would think these things will settle down, though we're not slowing down the pace because, as I said, next year in 27, we'll launch next generation Tomahawk 7, 2x the performance, and we'll probably be by far the first out there, and then we'll continue to sustain that momentum. But at the end of the day, to answer your question, yeah, I expect as a composition of our total AI revenue in any quarter, that we'll be ranging between probably 33% to 40% AI networking components.
Great. Thanks, Hock.
Thanks.
One moment for our next question. And that will come from the line of C.J. Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. I'm curious, how are you thinking about the move to disaggregate prefill and decode from the GPU ecosystem and the impact to custom silicon demand? Are you seeing any potential changes in sort of the relative mix between GPUs and customer silicon?
I'm not sure I fully understand your question, CJ. Could you clarify what you mean disaggregate?
Sure. Pushing off workloads to CPX for prefill and working off of graph for decode, and having that disaggregated kind of world. And does that put any pressure in terms of the demand for custom versus going with a full GPU stack?
Okay, I get what you mean. That word disaggregation kind of threw me off. In a way, what you're really saying is, how is the architecture of AI accelerator, be it GPU or XPU, evolving as workloads starts to evolve? And that's what we are seeing very much in particular. The one-size-fits-all of a general-purpose GPU gets you only that far. You can still keep going on because you can still run different workloads, like you run mixture of experts, even though you want to run mixture of experts with sparse cores to be very effective. You hear the term. But in a GPU, you're designed for dense matrix multiplication. So you do it with software kernels, but it's not as effective as you'd hard code it in silicon and make those XPUs purposely designed to be much more performing for mixture of expert workloads, say. The same applies for inference. And what that drives down to is you start to see designs of XPUs become much more customized for particular workloads of particular LLM customers of ours. And the design starts to depart from what is the traditional standard GPU design, which is why, as we always indicate before, XPUs will eventually be more the choice, simply because it will allow flexibility in making designs that work with particular workloads, one for training even and one for inference. And as you say, one perhaps will be better at pre-filling and one to be better at post-training or reinforced learning or test time scaling. You can tweak your TPUs towards the XPU, Freudian slip, to a particular kind of workload LLM that you want. And we're seeing that. We're seeing that roadmap in all our 5 customers.
One moment for our next question. And that will come from the line of Timothy Arcuri with UBS. Your line is open.
Thanks a lot. I had just a question on sort of the puts and takes on gross margin as you begin to ship these racks. I mean, obviously, it's going to pull the blended margin down, but I'm wondering if there's any guardrails you can give us on this. It seems like the racks are maybe 45-50% gross margin. So I guess, should we think about that pulling gross margin down like 500 basis points roughly as these racks begin to ship? And I guess, part of that, Hock, is there some like floor to the gross margin, below which you wouldn't be willing to do, more racks? Thanks.
I hate to tell you that. You must be a bit hallucinating. Our gross margin is solidly at the number Kirsten reports. We will not be affected by the gross margin and by more and more AI products going out. We've gotten our yields, we've gotten our costs to the point where the model we have in AI will be fairly consistent with the models we have in the rest of the semiconductor business. Kirsten?
I would agree with that. I think on further study, relative to even comments that I did make last quarter, the impact relative to our overall mix is actually not going to be substantial at all. So I wouldn't worry about it.
Oh, okay. Thank you so much.
One moment for our next question.
Oh.
And that will come from the line of Stacy Rasgon with Bernstein. Your line is open.
Hi, guys. Thanks for taking my question. I don't know if this is for Hock or Kirsten, but I wanted to dig in a little more to this substantially more than 100 billion next year. I'm trying to just count up the gigawatts. I counted, 8 or 9. You have 3 from Anthropic, 1 from OpenAI, so that's 4. You said Meta was multiple, so at least 2. That gets me to 6. Google, I figure, should be bigger than Meta, so like at least 3. That's 9, and then you got a few others. I had thought that your content per gigawatt was sort of, call it in the $20 billion per gigawatt range. I guess what I'm asking is my math around the gigawatts you plan to ship in 27 correct? And how do I think about your content per gigawatt as that ships? Maybe it will be, quote unquote, substantially more than 100 billion.
Stacy, you have a very interesting perspective, and I got to admire you for that. But you're right. You can look at it at gigawatts, which is the right way to look at it instead of dollars, because that's how we sell our chips. So you have to realize depending on our LLM customer, our 6 customers now, sorry, not 5, 6, the dollars per gigawatt, chip dollars varies, sometimes quite dramatically. It does vary. But you're right. It's not far from the dollars you're talking about. And if you look at it by gigawatt in 27, we are saying it's getting close to 10 gigawatts.
Got it. That's very helpful. Thank you.
Sure.
And our next question, that will come from the line of Ben Reitzes with Melius Research. Your line is open.
Hey, thanks. Hock, great to be speaking with you. Wanted to ask you about your commentary about supply visibility on those four major components through 2028. How'd you do it? This is probably you're the first one to kind of go out through the 28 timeframe. And secondly, after this astounding growth in 2027 for your AI business, do you have enough visibility to grow quite a bit in 2028 based on the supply that you see and that kind of commentary? Thanks a lot.
The best answer is, yeah, you're right. We anticipate this sharp accelerated growth. Now, nobody could anticipate the rate of growth is showing, but we kind of anticipate a large part of it, or I guess, for the longer than 6 months. We were early in being able to lock up T-glass, the infamous T-glass you all heard about. We were very early. We've locked up substrates. We have worked on our good partners on the rest of the stuff we talked about. And so the answer to your question is somewhat anticipation early, and the fact that we have very good partners out there in these key components. What else can I say except that? Yes. Charlie, you want to add anything?
Yeah, just maybe a couple of quick ones. I think you covered that piece really well. I think, Ben, the other piece that's really important, as Hock said, we build custom silicon for 6 customers. We have very deep strategic multi-year engagement with them. They share with us, because of this custom capability, exactly what they anticipate, at least over the next 2 to 3 years, sometimes 4 years. And so because of that, that's exactly why we went and secured all the elements Hock talked about. And when we secure this, it requires investments with these partners, sometimes developing not just more capacity, but the right technology and capacity for that. So we have to go secure it for multiple years. And you're right, we're probably the first one to secure that up to 28 or beyond.
And can you grow in 28 with what you see in supply? Sorry to sneak that in.
Yes.
Thank you.
Thank you. Our next question that will come from the line of Vivek Arya with Bank of America Securities. Your line is open.
Thanks for taking my question. Hock, I just wanted to first clarify the Anthropic project you're doing, the $20 billion or so for a gigawatt this year. How much of that is chips and how much of that is kind of racks? I just wanted to understand when you say $100 billion in chips, is there a distinction between chips versus your rack scale projects? Because just that project is supposed to triple next year. And then my question is, your AI business is transitioning from kind of one large customer that was, where you had kind of exclusive partnership to now multiple customers who are using multiple suppliers. So how do you get the visibility and the confidence about, how your share will progress at these multiple customers? Because it's a very kind of fragmented engagement that they have across a whole range of cloud service providers and so on. So what are you doing to ensure that you have solid visibility and the right market share at this fragmented set of customers who are using multiple suppliers?
Vivek, you have to understand one thing about, first, as Charlie correctly put down very nicely, we only have very few customers, to be precise, 6. For the volume we're driving, the revenue we're driving, we only have just 6. Prior to that, even less recently. And number 2, also have to understand with the dollars each of them spend and the criticality of the nature of what they're embarking on. And that's why I threw out this term. Meta has MTIA. That's their custom accelerator program. To them, as to every one of my customers in this space, it's a strategic play. It's not optionality. To them, long-term short term, medium term, is strategic, extremely strategic. They don't stop, and they are very clear, each of them, on where they want to position this custom silicon within the trajectory of their LLM development and the trajectory of how they develop inference for productizing those LLM. That part, we have very clear visibility. Anything else on GPU, using neo cloud, using cloud business, these are all transactional and optionality. So you have to split, you point out very correctly. It seems very confusing. Trust me, not for us, nor those customers we have. They're very strategic, they're very targeted, and they know exactly what they're building up and how much capacity they want to build up each year. And the only thing they think about is, can they do it faster? Otherwise, it's very strategic and targeted on a projected roadmap. Anything else you see in the mix is pure, I call it, opportunistic for these guys, the optionality. So it's very clear.
And on the clarification, Hock, Anthropic racks versus chips. Thank you.
I'd rather not answer that, but we're okay. As Kirsten said, we're good on our dollars and margin.
Thank you. Thank you.
Thank you. Our next question that will come from the line of Tom O'Malley with Barclays. Your line is open.
Hey guys, thanks for taking my questions. I have one for Hock and one for Charlie. So Hock, I know you're very specific in particular about what you put in the preamble, and you noted that customers are staying at direct attached copper through 400 gig SerDes. Is there any reason you're pointing that out in particular, especially as a leading pioneer in CPO? And then on Charlie's side, as you're adding more customers here, I would imagine customers with design ASICs with you are going to use scale-up Ethernet. Maybe talk about scale-up protocols and how you see Ethernet developing there as well.
Okay, no, I'm just highlighting the fact that we're on networking. Our technology is really very, very uniquely positioning us to help our customers, and more than our customers, even customers using general purpose GPUs, not just XPUs, which is that, you know, if you are running trying to create LLMs and creating your own AI data centers and designing it, architecting it, you truly want larger and larger domains or clusters and you really want to connect XPUs to XPUs directly where you can. And the best way to do that is use direct attached copper. That's the lowest latency, lowest power, and lowest cost. So you want to keep doing that, especially in scale up, as long as possible. In scaling out, we're past that. We use optical. That's fine. But I'm talking about scaling up in a rack, in a cluster domain. You really want to use direct attached copper as long as you can. And we are still, based on our technology that Broadcom has, especially on connecting XPU to XPU or even GPU to GPU, we can do it with copper. And we can push the envelope from 100 gig G to 200 G to even to 400 G. We have SerDes now running 400 G that can drive distance on a rack to run copper. Well, all I'm trying to say is you don't need to go run into some bright, shiny objects called CPO. Even as we are the lead in CPOs. CPOs will come in its time. Not this year, maybe not next year, but in its time. Charlie?
Yeah, no, well said, Hock. And on the question of Ethernet, with the debut of the cloud, Ethernet became the de facto standard in every cloud for the last 2 decades. If you look at the debut of the backend networks, as Hock articulated, there was 2 years ago a big fight about what protocol should be used to achieve the latency, the scale necessary on scale out. And the industry at the time, 24 months ago, was not clear. We were clear. We were very clear, actually, about what the answer should be. And again, because of the deep engagements with our partners, they made it very clear to all of us and the industry, GPU or XPU, that Ethernet is the scale-out of choice. Check mark. Today, everyone is talking about scaling out with Ethernet. Now, when it comes to scale up, yes, exactly like what happened 3-4 years ago on scale up now, what's the right answer for this? And what we're hearing consistently and what we're seeing is the right answer is Ethernet. And as you know, last year we've announced with multiple hyperscalers and many of our peers in the semiconductor industry that Ethernet scale up is the right choice. That's what we believe will happen. Time will tell, but a lot of the XPU designs we're doing, we're being asked to scale up through Ethernet, and we're happy to enable that.
Thank you both.
Thank you. And our next question that will come from the line of Jim Schneider with Goldman Sachs. Your line is open.
Good afternoon, and thanks for taking my question. Hock, it was helpful to hear you discuss the progress of your other full custom XPU engagements outside of TPUs. As we look into next year, is it fair to assume that those are mostly targeting inference applications or not? And then could you maybe qualitatively speak to either the performance or cost advantages relative to GPUs that is giving those customers the ability to forecast in such large scale? Thank you.
Thanks. It's, most of our customers begin with inference, simply because that tends to be, the easiest path to start on. Not necessarily from anything else than the fact that, when you do inference, it's less compute. But also, then the question is, do you need this general purpose, massive, dense matrix multiplication GPUs when you can do it more efficiently, effectively with custom inference silicon XPUs that do the job better or just as well, much cheaper cost, lower power. And that's what we find these customers starting with. But they are now in training, and many of our XPUs are used both in training as well as inference. And by the way, they are interchangeable. Just a GPU can be used not just for training, which they are perhaps more perfectly suited to, but they can be used for inference. What we're seeing is our XPUs are used for both. And we're seeing that going on. But we're also seeing very rapidly, more for those customers who are much more matured in the progression I talked about in their journey towards complete XPU, that they will start to develop 2 chips each year simultaneously, one for training, one for inference, to be specialized. Why? Because what we're seeing very clearly for these players, LLM players, is you do the training to achieve a higher level of intelligence, smarts for your LLM. So great, you get yourself a great LLM, state of the art or more. Now you got to productize it, which means inference. Well, you can't then decide at that time you got your model going as the best, because if you decide then to do your inference productization, it'll take you a year at least to productize, at which time somebody else is going to create an LLM better than yours. So there's a leap of faith here that when you do training to create the next level of super intelligence in your LLM, you have to be investing simultaneously in inference, both in terms of the chip and the capacity. So our visibility is really coming out better and better as we find those 6 customers get more matured in their progression towards better and better LLMs. So yeah, that is the trend we are seeing. It's not happening to all our 6 customers yet, but we are seeing a majority of them headed in that way right now.
Thank you. One moment for our next question. And that will come from the line of Joshua Buchalter with TD Cowen. Your line is open.
Hey, guys. Thanks for taking my question and congrats on the results. Appreciate all the details on the expectations for deployments at specific customers. I was hoping you could just maybe reflect on how visibility has changed over the last 1 to 2 quarters that gave you the confidence to give us more details. And then on a specific one, you mentioned greater than 1 gigawatt for OpenAI in 2027. With that deal being for 10 gigawatts through 2029, that implies a pretty sharp inflection, I guess, in 2028. Is that the right way to think about it? And was that sort of always the plan? Thank you.
Yes. Well, yeah, this, as you all seen, and you all know, in this generative AI race that we are in now, and I shouldn't use the word race, let's call it progression among the few players we see here. I mean, it's a competition. Each is trying to create an LLM better than the other and more tailored for specific purpose, be they enterprise, be they consumer, be they search. Each one is trying to create it more and more. And all of that requires not just training, which is important to keep improving your LLM models, but inference for productization and monetization of your LLMs. And we are and probably call it the fact that we've been engaged with some of them now for more than a couple of years. We're getting better and better visibility as they have more and more confidence that the XPUs they are working on with us is achieving what they're getting at. As they get a sense that the XPUs they are working on with the software, with the algorithms they needed, that they are having more confidence that this XPU silicon is what they need. And they work, and it gets better and better. And as it gets better, we get more visibility, as Charlie puts up perfectly. Because at the end of the day, we only have 6 guys to work on. And these 6 guys are all, as I said, look at XPUs and AI in a very strategic manner. They don't think one generation at a time. They think multiple generation, multiple years. And in spite of all the hubris, noise out there on what's available, they think very long term on how they deploy the XPUs they develop with us, how they deploy in achieving better and better LLMs that they want to create, and more than that, how they deploy in monetizing. So we are part of their strategic roadmap. We are not in just optionality of, shall I use a GPU? Shall I use it in the cloud because I need to train for 6 months? No, this is more than that. The investment these guys are making are long-term, and it's great to be part of that long-term roadmap as opposed to a transactional roadmap. And the noise, as I answered an earlier question is there's a lot of noise that makes up short-term transactions with what is long-term strategic positioning of our business and our product. And to sum it all, I think our business in XPUs is a strategic, sustainable play for all the 6 customers we have today.
Thank you.
Thank you. That is all the time we have for Q&A today. I would now like to turn the call back over to GU for any closing remarks.
Thank you, Cherie. Broadcom currently plans to report its earnings for the second quarter of fiscal year 2026 after the close of market on Wednesday, June 3rd, 2026. A public webcast of Broadcom's
Okay. Stock is up 4.8%, ladies and gentlemen. What a call. What a call. Octane, Viva is up 12.7%, by the way. Good call. Good call. Also, I like when companies directly tell you when the next earnings report and call is going to be. You don't have to wait like 2 weeks just before to get the announcement. But yeah, very, very good call. I have already here a nice little summary ready. So let's go over all of that. 2026, 2028 outlook. So for fiscal year 26, custom XPUs ramp across all 6 customers now. I don't think we have the names of all 6, but we do know it's Google. We do know there is Anthropic. We do know it's OpenAI. We do also know it's Meta. So I'm missing 2 other names here. If anyone knows who they are, let me know. Or maybe I just forgot. Let me know in the chat. Thank you very much. So 2026, custom XPU ramp across all 6 customers. Google strong with 7th gen Iron GPU into 2027. Anthropic starts strong. Meta custom scaling. AI networking accelerates to 40% of AI revenue from what I found here. Fiscal year 27. So line of sight to AI chip revenue of over $100 billion. That's insane. That's around 10 gigawatts total, with Anthropic over 3 gigawatts, OpenAI over a gigawatt, volume start, Meta custom doubling, and others are surging according to them. Supply chain is fully secured for wafers, HBM substrate through 2028. As for 2028 plus, visibility is improving with next-gen Tomahawk 7 switch, double performance. What else do we have here? 400G plus direct attached copper for scale-up. It's low latency, power, cost versus optical. And dual chip designs, training, and inference. They now have 6 strategic XPU customers, up from 5. Again, maybe the chat has already responded. Amazon, maybe Amazon, but we also know that Amazon, I think, is still using also Marvell. So I get, maybe. Maybe Amazon is one. ByteDance, yeah, ByteDance was one of what, correct. ByteDance was one of the rumored ones. So okay, Amazon and ByteDance could fill all 6 spots. Okay, good catch, everyone. So yeah, I mean, all in all, firing on all cylinders. Very strong 26, expecting an even stronger 27. Seems like 2028 and onwards. I mean, what was the question? Do you think you see the growth in 28? And he was like, yes. Okay, great stuff. Stock is up 4.6. Is Credo up? Let me actually remove this because this is annoying on the 1 minute. Yeah, Credo is up $7 after hours. Okay, cool. Credo pumping like it was their earnings. Yeah, this was their earnings for Credo. And then they dropped here 14.8%. And now we're going back to pre-earnings levels, which, okay, is fine for those that wanted to accumulate more. I guess this was double bottom, could be a double bottom, $95 for Credo. Stock was very low on the RSI here, not oversold. So could be the trade desk after hours. What happened there? What happened? Let's see. The trade desk is up 11% after hours. It doesn't look like it when you do it like this, but when you go from 25.2 to 28 or so. Let's see. TTD, if we can find some information, and then we'll close the stream. Why is the trade desk up? OpenAI has held early talks with the trade desk, apparently, to bring ads to ChatGPT. So I I guess ChatGPT, OpenAI does work now with the pump for these types of stocks. Okay. Interesting. I guess with the traders, I don't know who's been playing. Who's Jason? Jason is very happy with the traders calls. Oh, Jason, I don't know him, but it's the guy that talks with Amit, the paper gains, technical analysis. I assume it's him. I assume. But yeah, valuation-wise, I guess it made more sense. It's just that the company itself has to... Asian Steve, okay. The company itself has to show the market that the business can reaccelerate, which is what they've promised investors and have not really delivered just yet. But I guess he'll take his 10% pump in stock, which will probably be maybe triple digits for his options, depending on what his strike price is. I don't know. But okay, cool. What else do we have here in the after hours? IRN is down 4.8% right now. And that's the one that's down the most. Okay. Marvell is up 1.6. Again, like we said, whatever Broadcom is going to do, Marvell is going to feel it as well. In this case, it's green. Marvell reports tomorrow. Duolingo is up a little bit, but that's it. Yeah, United lost 2-1 against Newcastle when Newcastle were playing with 10 men. It's because Bruno Fernandes was busy streaming Broadcom's earnings report. And Chelsea won 4-1. Yeah, okay. I guess that's about it. For us in today's live stream. Thank you all for joining. It's pretty late. We shall see each other tomorrow. I'm not sure that I can do a live stream tomorrow, but you never know. Maybe I'll do a surprise one because I'm probably going to get stuck somewhere. But I do have some interesting videos coming out. Well, ideas of videos coming out. So stay tuned for that. Thank you all for joining. Have a great rest of your day or just good night. Bye-bye.